stand. So a very median market here. You know, you can see you're sticking well on your MAs, nothing really happening, stock oscillator way in the middle. You could really take it either way, to be honest. But because it's fallen for a considerable period of time, you know, through 2016, I'm going to consider a long. And I'm going to do it about to the tune of 0.2 lots. Now, good, very erratic push here. I'm just going to add another one, okay? And I'm going to keep it on the daily and just see where we end up with this. So I'm going to play through a little bit, draw down, you know, very minor on these entries. Now, price is really subdued here, so I'm going to just swap to a short hedge, just take some of that 0.2 exposure off, take that one away, add another 0.05, take that one out. I would have liked both of them, but I'm just going to add a 0.15 long. Okay, I'll kill off the short side and I'll play through again. Any push to the lows on an extreme and I'll look to add another long. So sticking along this trend line, you can see, and well into those early MAs, just subduing price. Getting a bit of bullish price momentum now to the upside, breaking those local MAs. So I'm going to kill that one off. I'm going to add a 0.15 short. On a considerable dip, I'll kill it and take a long. Otherwise, I'm just going to hedge long. So get rid of that there. Take a long 0.15. I think I'm just going to add another one because we're looking a little bit more juicy to the upside. Okay, so we'll see where we end up with this. We're not really going very quickly. On the low, I will add another lot, I think. Not literally, but, you know, a lot as in a few entries. I'll take these ones off for gains overall, and I'll just add something like this. Okay, so 0.05 there. Kill that one off. Take two of those long. You can tell them in the zone, as we're going quite quick. Gains continually, 100% rate of accuracy. And it's good just to pick up these gains, because if we need to spend some of these gains on any hedges, you know, we can end up doing that. So couple there, and I'll add a couple there. I might have clicked that 3 times, actually. Not sure. Take one away. Okay, nice push up. Take that one away. Yeah, I did. Okay, take all of these longs off. Okay, long exposure's gone. Add 0.05 there. So because we're trading a very median market, this hedge mode becomes the most powerful. Obviously, it works in any market conditions, like you'll see now, because we're going to start coming away from these entries. Okay, I'm going to take some a little bit hedge long, take that one off, take a little bit more long. So we're now hedging out this short underneath. $27 of that $84 we've taken. I can add another 0.05 back, take another 24 on that, and you've basically hedged out that whole thing. There you go. Or you've used DCA gains as well. I'll add another long, and then I'll probably add another couple longs if we get to the low, which we didn't. So I'm just going to take that one away for gains, add a couple shorts. Okay, shorts now out the money, but we can close the longs for gains. And I'm going to look at adding another short now there. Okay, I'm just going to kill that off because it didn't give us much. Now I'm going to add a long to hedge that former short. Okay, nice drop for these shorts to be killed. Again, like I said, this is most profitable when you do go sideways. But if you're thinking, okay, well, what if you don't go sideways? Well, you have many gains banked to deal with your drawdown there, effectively, you know, like you would with hedge gains. But nonetheless, as long as you're spacing entries out correctly for the whole spectrum of the market at the right sizes, you really shouldn't have a problem with drawdown anyway. And the fact that you've already made $1,100 just makes it even easier to deal with overall. At some point, this is going to break. I mean, there's an inevitability the market's going to look like that at some point. But again, like I said, you know, if you're watching all these hedge videos, you'll see many of them. That does happen, and we're absolutely in no trouble whatsoever. Okay, so at this point, I've not closed a single loss, and I'm incredibly accurate, which is part of making a successful hedging strategy. You've got to have those key price action rules that are going to allow you to pick trades very comfortably. Okay, so we're falling lower now. I'm going to add another 0.15 just at that low, and then here's what I was talking about, basically. At this point, you've gone a stretch of 148 to 142. You've got about 600 pips. You've got basically no drawdown. Well, you have got no drawdown in real terms. But nonetheless, I can keep working my way through this, no problem. It doesn't matter what happens, more or less. I'll take that one out for gains. I'll add another couple of shorts. I'm actually going to take one of these off just in case. Okay, so we did push higher, as I suspected. I'm going to half that exposure long. Don't need too much. Take that one off. Add a short. Okay. Now we might break to the upside and get an opportunity to start to hedge long. Okay, I'm just going to kill that one off. I'm going to take a little bit long just in case we do rally. Okay, so it would have been ideal to get rid of that. But now we're in a situation where we can add something heavier short. And oftentimes you won't need, so there you go, massive gain there. But oftentimes you won't need to go too crazy on hedging anyway, because often you'll get DCA gains. The entries you take second to the other ones are going to pay essentially for what you're losing on those. Nonetheless, we can take a couple of these off, just get rid of those. Okay, and I'm going to add another 0.2, and I'm happy with my long exposure at this point. Market's getting absolutely throttled now, so I'll add another 0.2 at that low. Still overall in real terms in net gains. Running drawdown, fairly minor. So breaking this low, if we do, which we didn't, or we might still, I can be careful about my moves going forward. So I hedged 0.8 by mistake, so we can take $530 off this. That should have been a 0.08. But nonetheless, we still made considerable gains anyway. So going lower, okay, I'm going to look for a long-term level, which there's many in here. Okay, we haven't dropped, so I'm just going to kill that one off. And I'm going to, again, look to take some minor hedges just to protect myself in case the market goes lower. It might not, but, I can take small gains over and over again to the short side. Just as the market dwindles, it's going to give me a bit of help. There you go, $127 off from about 1,600 is not a massive amount, but it is helpful, like I said. Can add another long there because we've got long-term price action levels. If we keep going any further than this, I can add another one. Okay. So now you're getting that market just push the one-way traffic. Take that one away. Just going to take a very small hedge just to scale into the short side. Take another one there. Okay. And now I'm going to take a long because we're dipping a little bit. Take another long. So again, just increasing my long exposure. That didn't do an awful lot. Twice I should have taken that, but I've missed it because we're back testing and it's a million miles an hour. Doesn't matter anyway. Still took some shorts off there. It looks like we're going to break the low, so I'm going to take a couple of shorts there. Take that one away, $54 or so. I'm just going to remove one of these longs for our first loss, I suppose. And then my job really is to look at how we can start to reduce so I can end this video and end the cycle overall. But 152 now to 138, it's a considerable stretch. Whether you're going to get many times where that, you get much further than that, it's unlikely. If you look at a lot of Forex markets, for anyone who's asking, if you go down and down and down and down and down and down, I have filmed that already. But we can spend $550 there to get rid of that. That's spent out the hedge gains overall, or our gains, I suppose. Hedge and not hedge. Take those off. Gains. Add a couple of longs there. Okay, now it looks like we're going to break the low, so I'm not going to be too enthusiastic at buying. But if we can push up again considerably, I'll probably get long side gains on those local 0.05s, and I might be able to dust away that former 0.2. So we're still getting nearer that low. It looks a bit dangerous, so I'm going to take 0.1. Okay, if we keep going lower, I can take something much more considerable long. Okay, we're not. We're pushing up slightly. Still nothing here. So we come back to your river, your 20 and your 40 MA there. I'm just going to take something light so I can hedge a little bit. Okay, big push up there. Okay, so I'm going to take that off. I'm going to take a couple more shorts. I'm going to take that one away for a loss, spend some gains. And on a dip, I'm going to take that one away. So I'm going to spend a bit more. I'm going to hedge long twice because we look like we're getting a bit of momentum. I'll take that off. Okay, I'll take that off. Gains. I'll add a couple more shorts there. And then as we go up higher, I'll get the chance to probably hedge long and potentially exit that. And on a further dip, I'll kill off those shorts, I think. Take a couple there. Add a couple in. So not falling just yet. Okay, I'm going to add a couple more 0.07s and just play this a bit. Okay, that's a good dip. Take that one away. Take that one away. I'll take that one away. And I'm going to hedge long a couple of times. Take that one away. Close that. And take another 0.07. Take that one off. So I'm closing quite a few here. That 0.5, I probably would have got about that anyway, but obviously I'd forgotten to close it. But nonetheless, we're not seeing any considerable drawdown, just gains routinely. Take that one away, light long. Okay, so a lot of trades, very, very likely here. Yes, gains aren't millions of pounds, but it's very easy to do this, very little work. Okay, and if I want to, I could take another 0.07, take that off. And if I want to end the whole thing, I can take them both away. So basically no risk as always. Very, very low sizes, risk averse. But like I said, and like I always say, you can trade multiple assets in your portfolio. Massive win rate as always, but you could have many assets stimulating a lot more than this. You could put the sizes up because you can see we never go negative as always again. So just bear that in mind when you watch this. Thanks for watching. Go underneath if you want to learn how to do this. I'll see you in the next one.